Are you also facing a dilemma of whether to invest in gold or in the market? Hi everyone, welcome back to Finvision, your go-to channel for investment insights and strategies. If you are new here, don't forget to hit the subscribe button and join our growing community of smart and savvy investors. Diving straight into today's topic, let us understand by looking at facts and figures from the history and past data. So here is the historical performance of gold and Sensex since 1979. That is, since the inception of Sensex. Over the last 45 years, if we talk about yearly performance, 37 times out of 45 times, gold has given positive returns and it has given negative returns on 8 times with a compounded annual growth of 10%. In case of Sensex and the markets, for 35 years out of 45 years, it gave positive returns and 10 times it gave negative returns. But in spite of all this, it gave a compounded annual growth of more than 15%. In 1979, gold prices were at rupees 937 per 10 grams, while Sensex value was only 100. In the past 45 years since then, investment in gold has multiplied by 80 times. However, in the same period, investment have multiplied by 750 times in case of markets and Sensex. Even in the yearly and year-wise performance, Sensex outperformed gold in 27 years, whereas gold outperformed Sensex only in 18 years. Now coming to the question of which amongst the gold and market is safe. The answer to this is both are equally volatile and both have their good and bad phases of positive and negative returns. From 1992 to 2002, that is in a span of 10 years, gold did not yield any returns, in a way gave only negative returns. Also, from year 2012 to 2019, that is in a 7-year period, gold declined from rupees 33,000 per 10 grams in 2012 to 27,000 per 10 grams in 2019. Thus, it gave minus 20% returns in this 7-year period from 2012 to 2019. When we compare this with the markets and Sensex, in markets, such negative phases have been much shorter. Also, in investment, it is important for you to understand and factor in the liquidity, logistics, and other aspects as well as their cost too. Wherein we find gold suffers from liquidity, logistics, quality, storage, and safety issues, whereas investing in market doesn't have such issues, and making purchases and selling the investment is simple and is available at the click of the button. To summarize their pros and cons, pros for gold are it is a safe haven asset and portfolio diversification can be done by investing through gold. Cons for gold are no income generation except in the case of sovereign gold bonds, limited growth potential, lack of liquidity, logistics and safety issues. Pros for Sensex are potential for higher returns, better liquidity and diversification across sectors is possible through investing in market. Cons for the markets are its volatility, which can be little high. So what did we learn? We learned that investing in the market is a better proposition than in gold. Buy gold for end use, and that is for jewelry, for the occasions of marriage, etc. Still, if you have decided to invest in gold, if liquidity is needed, then go through the mutual funds and the ETF, or if investment goal is more than 8 years away, go for sovereign gold bond. Key investment takeaways from a purely investment perspective, it is better to invest in markets through mutual funds and only 5 to 10% investment of portfolio value in gold is recommended. Hope you learned something new in this video and it will help you in making successful investment. In case you need help with your investment, do connect with us at Finvision. Do tell me in the comment section which topic should I cover next and your views on this one. Also, don't forget to like, subscribe, share and stay connected.